Welcome back. Today I'm gonna start with a brief history lesson on Fed policy over the years. Here we have a chart of the Dow Jones Industrial Average for the last, what is this, 100 years or so. So basically the Fed has two regulating measures, one of which of course is the interest rate, here represented by the yellow line. This is the Fed funds rate, which is the rate at which banks lend each other, and every other rate like mortgages and like you can see here the US 10-year treasury, it uses the Fed funds as a benchmark to base itself on, and actually it tries to predict it, but that's another story. So you can see, as you can see, the Fed's funds, they try to regulate inflation. That's their premise, right? To when inflation here represented in blue, when it goes up, they increase the interest rate. When it goes down, they can decrease the interest rate down again. The thing is that after the global financial crisis, they kept it low for very long because the other policy that they use to regulate, in air quotes, of course, the U.S. Currency and economy is they control the monetary base, here represented in white by M2 metric, which represents most of the monetary base. And as you can see, they start to print very heavily here after the global financial crisis, and they had already started increasing interest rates in 2018, 2019, but when COVID hit, they needed to print so much that they had to send the rate down again. So because if they wouldn't, the US government wouldn't be able to pay the interest on a lot of its debt, because most of these monetary base is bonds, which are bought by the US government to the Fed, and they use that money to invest in the economy, stimulate the economy. So only recently they start to increase interest rates yet again, because as you can see, we had a huge bull flag on inflation metric here, and it totally broke out, and then they had to start increasing rates, and it's actually starting to dip down again, the inflation rate, but they told already that in 2023 they are not thinking of lowering interest rates. They are already contracting the monetary base as well, and as you can see, that had a bad impact on stock prices. So what I wanted to show you is that it's not looking good for US equities right now. As you can see, after, let's put it in a monthly chart. As you can see, after an extended period of upside movement, you need to have a few years of consolidation and correction. Here it's the Great Depression of 29, and here we have the Second World War. After that we had a nice bull run, and then in the 70s we had the stagflation environment, in which we had a very high inflation, as you can see, and the market was going sideways. So in real terms, it was actually correcting downwards. Also, after this big bull run of the 80s and 90s, we had this consolidation represented here by the crash of 2000, and the Dow Jones is not as severe as in other indexes, as the Nasdaq, for example. And then 2008 made an sideways consolidation in this higher time frame, Then we had like 20 years of bull run again, and now I'm expecting some sideways consolidation. Now I don't really know the exact shape or form of this correction, but it probably will take a while. So this is to say that I'm not really interested in most US equities in the coming years as an investment thesis. So I've shown you the Dow Jones, the S&P. Let's look at it in the shorter time frame, like a daily. As you see, it started coming down already. It broke the uptrend here when it went down and consolidated, then another downwards impulse, another consolidation, and now here we are like in the middle of nowhere. Looking at other indexes and other stuff, I feel like this maybe has bottomed for now. Maybe there's some room for some upside, but overall, as we've seen in the bigger picture, we probably will be staying in this big range for a few years. So there's not much interest in this. That being said, there are a few stocks that, because of this big correction, for example, Tesla, it had such a big downwards impulse that like it crashed 75%. And Tesla is a technology-based company, but there are other companies that have good value in them that, because of this big decrease in prices, have good their price to earnings and price to book and other metrics have regulated and are actually being seen as better investments right now. Tesla is just an example of a stock that came down pretty hard and probably has room for a relief bounce. But one thing I would like to show is the Hang Seng Index, which is the index of Chinese biggest stocks that are listed in Hong Kong. And as you can see, in contrast to the US, this index has been consolidating since 2008. So we had this big sideways correction after a big impulse. I'm looking forward for this index to start breaking upwards, and I'm seeing some bigger opportunities in Asian equities rather than Western ones. Alibaba is a pretty good example of one of the biggest equities in this index. As you can see, it's breaking out of this weekly downtrend. We've got some others like JD, it's like a pretty big company as well. Also is breaking out. Here I was looking at Sony earlier, the Japanese-based company. As you can see, it's pretty strong compared to most things. Can put it in a monthly. It is uptrending nicely, and it seems to have put in a monthly bottom here. So yeah, there are good opportunities, even though the economic conditions in the US and the macro policy are not the best for risk on assets. I think there are still very good opportunities in equities worldwide. So the thing is that the Fed is the biggest central bank in the world because it controls the biggest or the currency that holds the most value in the world. The thing is that most central banks, or the biggest central banks, often lag the Fed. So they take Fed policy and put it into action for their economies a bit later. And here is the US dollar index. As you can see in the monthly chart, basically this is an index of the US dollar compared to a basket of other currencies depending on their size. Like it's like 40% a euro and 10 or 20% a pound and something like that, and the yen. It's basically the dollar against the biggest currencies. As you can see over the years, it's coming down. And not even looking at any indicators here, you can probably tell that this is a blow off top here, and we are probably putting in a lower high on the monthly time frame after this 5 wave correction, you could say. So if the US dollar is coming down, that's good because it normally benefits risk on assets like cryptocurrency, but we'll go there in just a bit. As you can see here in the daily, we broke the uptrend, came down, we made here a little flat, and when we cross or when we close the daily candle below these lows, it will be confirmed that this was just yet another correction, and when we break this uptrend, we probably will be retesting this uptrend, and when that breaks, probably going lower. Maybe bounce for a while, try higher, fail, come down. But this is a monthly chart, so and probably will be keeping an eye on this. But yeah, for 2023, probably looking for a lot lower in the dollar index. Maybe we can bounce, like some indicators are telling me that this is a bit oversold. So here, like in a month or two, maybe we can bounce for a bit, but probably then come down again. So this inflationary environment, coupled with weak dollar, it's the perfect recipe for metals. So I'm very bullish on gold. As you can see here on the monthly time frame, this is just a bull market, like it's against the dollar that's always devaluing, so and gold holds its value. So this is actually the dollar inverted chart, just losing its value decade after decade. And it looks like we are just ready for another impulse here yet again. We have correction, having here a big bear market, we have another correction, and it seems like we are breaking out, and my next target for gold is to 2400 roundabout. Also, when gold is looking good, I like to go look at gold versus silver, and here in a weekly I'm looking for gold to underperform silver, and since gold is in a bull market, I'm very bullish on silver as well. I have one nice position here, long-term position, looking for like 80 to 100 to 150%. That's my price target for silver. Ultimate target like $80. It seems a bit far-fetched, but that's what the chart is telling me. Also, copper is looking nice. Not really sure about making new all-time highs for copper, but there's a few percentage points to be gained here. Looking good. But yeah, the reason I was compelled to make this video was because the crypto markets seem to have finally bottomed. And I don't say this with a light heart, because yeah, I've been waiting to say this for a big while. As you can see here on the crypto total market cap, we have several indications that the bottom is in. Basically, you have on these three momentum oscillators, you have the MACD, the RSI, and the custom indicator. with the jewel light here. They are all showing big bullish divergence where momentum is making higher lows, going up, and the price made a lower low, and it's making this really nice wedge pattern. I could go show you like in the BLX, the Bitcoin whole history charts since its inception. It always makes this kind of actually I've got a chart here. Yeah, it's here. As you can see, in all bear markets all Bitcoin bear markets take this kind of shape, which is it's basically a wedge. It's called a wedge, and as you can see, they all have this shape that has just printed on the on this current bear market. And yeah, for me, if Bitcoin loses these 15,000 lows, it probably will be breaking this long-term logarithmic uptrend, and I'm not really convinced. Momentum's oscillators are looking upwards. Let me pull up another Bitcoin chart. Okay, this one is too messy. Yeah, momentum oscillators are looking upwards in the weekly, in the 5-day, also already turning up. Momentum, 3-day, same deal. Daily, same deal. Actually, this is my preferred chart. I hope it's not too messy for you guys. As you can see, we are really coming here in the apex of this wedge, and if we can break this resistance, this 17k resistance, it will very likely pop like to 17,500 really quick, which is a nice let me see, a nice 2.5%. After 17,500 is reclaimed, I'm looking for 19k, which is the next resistance area, and that's a few, like 8% on top of that. But if Bitcoin is going upwards, we might as well look at Bitcoin dominance that seems to have put in a daily top here. And Ethereum versus Bitcoin is a very good metric for altcoins, because Ethereum is the biggest altcoin, and if it's outperforming Bitcoin, probably other altcoins are outperforming Bitcoin as well. And as you can see here on the weekly time frame on Ethereum versus Bitcoin, this really beautiful bullish flag, it's finally breaking upwards. It's already confirmed on the daily, it broke upwards, it's consolidating, it's breaking it again. Today is Sunday and it's already sending. Probably if tomorrow the S&P doesn't just fully melt down, that it doesn't look like it looks like it has some support here, we'll probably have a really nice green week. There are other opportunities like Polkadot, looking pretty beautiful, because yeah, as you can see, most of these assets are have been sold to the ground. It's minus 92%, so to see like a 50% rally here doesn't seem like a stretch at all. Also, a few others that I'm keeping an eye on, like Litecoin, don't have any position. Solana have a small positions, already 6% today, looking nice. So yeah, I don't want to go too much. One of the strongest altcoins it's Binance Coin. As you can see here, it's already meeting my targets, which is nice. And I say this because if Binance versus Bitcoin, or Binance Coin versus Bitcoin, it's a really strong coin. always outperforms Bitcoin, even in bear markets it outperforms, or at least stays sideways. And in this case, even versus Ethereum, I'm looking for it to outperform yet again. So yeah, keep an eye on Binance Coin. And yeah, I think that's it. Let me know if you have any questions or comments or whatever you want. If you want to reach out, talk about crypto, talk about markets. I'm here to help. I'm not, of course, this is not financial advice, but you know how it goes. Do your due diligence. And I just felt compelled to share this opportunity. I mean, in the grand scheme of things, one will have time, like Bitcoin when it starts a new bull market, it always has a lot of time. Like the most money is made in the third wave, like here in the third wave, or here in the third wave. But starting early, there's nothing wrong with that. These first moves are pretty significant always, and I'm really looking forward for this to pop up to 19k on a first stage, then probably see some consolidation and continuation. But yeah, I'm already rambling a bit too much. Let's keep it short and simple. Hope you liked it, and see you next time.